ಎಲ್ಲರಿಗೂ ನಮಸ್ಕಾರ. Myself Murali Mohan B, Assistant Professor of Commerce, Government First Grade College, Kumata. So today I'm going to present a video on the aspects called as ledger accounts as to be prepared during conversion of firms to a company. Conversion of firms to a company. So last class we are discussed about what do you mean by conversion of firms to a company, objectives of the conversion of firms to company, what are all the accounting entries in terms of all journal entries to be passed during conversion of firms to company in order to close the books of the firm. So today we discuss what are all the different types of ledger accounts has to be prepared during conversion. There basically six account has to be prepared. One is realization accounts. Second one is purchasing company accounts. Third one is equity share accounts, debenture accounts, partners capital accounts, and last one is cash or bank account. The first ledger account it is realization account. So realization account is to prepare in order to know the whether profit or loss on realization during transfer of assets and liabilities during conversion. So before taking any adjustments in realization account, we have to transfer assets and liabilities taken over by the purchasing company according to their agreed value. Next, you have to enter if is any sale of assets made by the firm, if it is company not taken over during conversion, if company is not taking any assets, if assets those assets sold by the partnership, if any made, you have to enter, you have to transfer cash or bank. With respect to liabilities, whereas if company is not taken over or not recorded, for this whatever payment made by the firm, you have to enter to cash or bank. That meanwhile, if it is any assets and liabilities also taken over, that enters to be also recorded here. If it is liabilities taken over your partners, you have to enter under the debit side to transfer is partners capital account. If any assets taken over by the partners, you have to enter under the credit side by partners capital account. Next, you have to enter what after calculation of purchase consideration, you have to enter in the relation account under credit side called as by purchasing company account. So after that, any expenses arise during realization. For that, if payment made, for that you have to make entry to cash or bank under debit side of the realization account. Once enter all these entries in the realization account, we have to close the realization. We can close the realization accounts by balancing the realization account. If it is debit side is more than credit side, we can able to find realization loss. Whatever loss we are finding, we are getting it during realization, that one we are transferred to partners capital account based on profit sharing ratio. If it is credit side is more than debit sides, we have profit on realization. Whatever profits, the profit it has to be transferred to partners capital accounts based on profit sharing ratio. So second ledger account it is purchasing company's account. Here for the sake of format, I given purchasing company's account. During solving of problem, If any, they give one name for the purchasing company, you have to write the name of the purchasing company. Here I give one format, just purchasing company. For example, uh, if you take example of XYZ Limited, sale A is firm to a Z Limited. Here XYZ it is called as selling firm, Z it is called as purchasing. So here instead of purchasing, you have to write Z's company account. The purpose of preparing purchasing company account is to know what are all the modes used for payment of purchase consideration. Debit side, you have to enter to realization, whatever purchase consideration is paid. For credit side, we have to use write what are the different mode used. For example, of a payment made in the form of equity shares, you have to write by equity shares in purchasing company. If it is payment made in the form of debentures, you have to enter by debentures in purchasing company account. If it is any cash payment made, you have to enter credit side by cash or bank. Here there is no balancing. Debit side is equal to credit side. So next entry is equity share account. Equity share account, purpose of preparing equity share is what is the share for each partners. In this account also, there is no balancing figure. Both debit side is equal to credit side. So debit side entry will be to purchasing company account data or credit side by partners capital accounts. Next entry account is debenture account also. It is also similar to this accounts. Here I didn't mention here debentures accounts. I'll move further. It is so debenture also I told same debit side the purchasing company accounts by partners capital account to know the each partner's debenture shares from the purchasing company. So next, once prepared with equity and debenture, we have to prepare partners capital account in order to transfer profit or loss of realization, reserves, equity share capital, and how much cash should to be paid to the partners. So first you have to enter as per balance sheet capital share of the partners by balance brought down. Then you have to enter by reserves. Reserves under profit and loss account based on profit and sharing ratio. Reserves we can find in the balance sheet. Profit or loss also you can find in balance sheets. Realization taken over by the partners. It is we can find in the debit side of the realization account. By real profit, this one also you can find in debit side under the realization during transferring of assets and liabilities. We can find profit. Whatever profit we find out, each share of the partners you have to enter in the partners capital account. Debit side, all the assets taken over the partners, that one you have to enter debit side to realization account, asset taken over the partners. Next, whatever shares and debentures received by the partners from the purchasing company, that also we have to enter in the debit side. If you have find any loss during realization of or transfer of assets and liabilities, find any loss, that one also have to enter under the debit side to realization account. So credits, if it is credit side is more than debit side, then the company has to make payment to the partners in the form of cash. So balancing figure of partners capital accounts. If it is debits balancing figure, you have to enter credit side of the cash or bank account. If the credit side balance figure, debit side in the cash and bank accounts. The last account is cash or bank accounts. So first you have to enter cash balance or bank balance as per the balance sheet, that is to balance brought down. Then you have to enter whatever purchase consideration paid, that one also you have to enter to the debit side. Next, realization expenses, whatever are the payment made by the company during transfer of assets and liabilities, you have to enter under the credit side. If it is any partner's loan, that one also have to enter under the credit side. If any payment made by the partners for the liabilities taken over, that also you have to enter. So what are all the balances you find under the uh, partners capital account? That one also you have to enter into the credit side. So here also cash and bank account is going to be get challenged. So I hope today's sessions were understood what are all the different sides of ledger accounts prepared and how to prepare, what are all the entries to be made. So next class we'll discuss about what is PC and what are all the methods we can use for finding out of purchase consideration. Thank you. Thank you.